Welcome to Brave. Be inspired by the best leaders of Southeast Asia tech. Build the future, learn from our past, and stay human in between. I'm Jeremy Au, a VC, founder, and father. Join us for transcripts, analysis, and community at www.jeremyau.com. Hi, Will. Welcome to the show.
Hi, Jeremy. Nice to be in it.
Yeah, really excited to have you because you're an entrepreneur who is really tackling, Southeast Asia financial inclusion. And I think you have a strong history, not just in terms of your background, but also in terms of the range of activities you're doing across Southeast Asia. So for those who don't know you yet, could you introduce yourself?
Yeah, I'm Willy Arifin, my full name. Came from family business, third generation. Since the early age, I'll say I've been groomed to be entrepreneurs. We talk about businesses a lot on the dining table, my parents and his families. And I do attend some board meeting even when I was very young, even though I don't know what it is. So I was just running around in the board meeting room and stuff, making noises and stuff. But yeah, I was always close within proximity of the business, I'll say. So I grew up, graduated from Michigan, Ann Arbor, came back straight, pulled back to family business, was asked to review the Southeast Asia strategy. Then, I was put in Indonesia to be in charge of the family business there. Well, times fly. That was 2003. And fast forward 2015, I bumped to my good friends from school, Ben from Michigan. We wanted to do something together. So we look at a few opportunities and stuff. Yeah, finally, we stumble into this data point that's very interesting in Indonesia. Unbanked and underbanked, there is a 80 billion funding gap, and there's 65 million SMEs in Indonesia. And that really caught my eyes. So pretty much we stick ourselves in. I told him, you have to be the Batman. I have to be the Robin, because I have a family business to handle. So it's hard for me to commit 100% of my time. So a lot of discussion and negotiation with my families. And finally, at one point, it's the gut feeling that I have that this is something that's going to be huge. So yeah, I decided to jump on board and be committed 110% to this. But yeah, that's one of my interesting tech journey. And since KoinWorks started in late 2015 until now, I think we grew from 4 people to now 650 people. It's very different, like how you operate a traditional business and a tech startup, right? In the traditional business run by the family, pretty much I was almost the youngest one there. Yeah. While in the tech startup, I'm pretty much one of the oldest one there. So it's a big gap and difference. But yeah, because of the gut feeling, I took the jump, and I think so far I've made the right move, I feel. Then, not only that, 2018 onwards, I start to be very interested in doing tech investment. So that's the time when me and my wife decided to allocate certain part of our money, our nest, our pool nest, to invest into founders that willing to use technology to disrupt the industry. So pretty much I want to empower entrepreneurs. I feel this is truly a golden era in Southeast Asia. At least, the past 5 years and the next 5 years will be very interesting. And Southeast Asia, I truly believe, will be the next powerhouse. Yeah.
Amazing. So let's talk about that beginning stage. You said you got to shadow some board meetings and as a kid. What do you remember about that?
Nothing. I was just running around, drawing things on the board, disturbing the families, So, you hear things they talk about growth, revenue, profitability, but at that age, when you're just like 8 years old, 9 years old, what do you know about that much, right? All you know is they are talking serious stuff, and you just want to catch the attention of your dad. So you're just making noise everywhere. But I think that little things actually creep into your mind during dinner, and my dad would talk to my mom about it. You listen, you get inputs here and there, but indirectly, it just creep into your mind. Now, only when you grow up, you just kind of remember. Actually, that's something that, we talk about. So now I encourage to talk to my wife too during dinner. while my kids is there too. So I think hopefully they'll catch a bit here and there too, and they will be inspired to be entrepreneur themselves for the future.
When you talk about business and entrepreneurship in front of your children, how do you feel gets across to them? What do you think they understand, or what do you think they don't understand?
Well, my son is quite interesting, actually. I mean, he's 10 years old now. We start to talk about stock trading. I give him a virtual account and 25,000 virtual money. So we talk about stock trading because me and my wife, we love to invest. We encourage him like, hey, why don't you try to invest things that you believe on the company? So as a children, they know Disney, right? So they will invest in Disney. They know Nike, Apple. They see things that is crowded or things that people use. And he did pretty well, actually. He doubles his 25,000 in less than 9 months. That was during the last year, but I don't know now, man. I have to check his portfolio. But this is the little things that I feel that indirectly you're influencing them for their futures, I think.
You went to Michigan, go blue, and so you decided to become a computer engineer. So why did you study computer engineering?
I've always been very interested in tech stuff. When I'm young, my dad always bought speakers and stuff, DVDs, AV, and then Blu-ray and stuff. So for me, he asked me to kind of install it, right? So I'm like sticking all the cables here, trying all the different speakers configuration and stuff. So that got me into electronics. And then he got me a computer then, which is running like Lotus and stuff. It intrigued me. So I thought I'm given the opportunity to choose. Some parents are pretty strict, like you have to go for this direction. I was given the freedom, right? So my interest then was, what makes software ticks, right? So very strangely, actually, I make games. So that's what I learned in school. So my final project, actually, I make a fighting games like Tekken or Street Fighter, that kind. So it's weird.
Amazing. From there, of course, what's interesting is that you didn't really go into an engineering job after that, right? You decided to pursue more of a business role eventually. So how was that transition between, your major versus your career?
Yeah, it's a big gap, but I wanted to go into, I applied to actually IBM then, right? Got accepted too, but my parents like, no, you're going back to family business straight. So, I was thrown there, I shadowed my dad. I was moved around department and learned by swimming. So that's always the way, right? They just throw you down and you have to figure out how to swim. The good thing is, what I feel, software engineers learns about logic 1010. A lot of things are logic. So I use that to implement to the family business. Of course, there's some frictions and feedbacks. Family business is always, there's a little bit more drama than just pure business. But you get to learn the loops, right? I mean, I was there for almost, 12, 15 years? Yeah. So, yeah, but my dad is also a good teacher, I guess.
Why was he a good teacher?
That's interesting. I mean, my dad doesn't really tell you what to do. He kind of gives the freedom. I think that's what you need when you're young, because if you are being told what to do, then you are just someone executing. But if you're not told what to do, you have the freedom to do whatever you want to do, right? So you can experiment and test a lot more things, right? So I think that's makes me become very experimental. And I think this bodes well for my startup too. A lot of MVPs has to be done. Quick to the market, try, test it, see it works or not. It doesn't give you fear, right? It gives you feels like, you are there to challenge the world kind of feeling. Yeah.
What's interesting is that you went through this transition at a family business and then eventually built out a new venture, right? So talk us through how that transition happened.
That's the super interesting one, right? Like I mentioned, my co-founder, he's the Batman, I'm the Robin when we start. I can't give my time, so I have to kind of row two boats. So it took me almost 3 years to transition out, to negotiate with my families. And, finally, I'm 100% in my daily job in there. But still, I have to attend the board meeting and strategy meeting sometimes quarterly with my family. But the transition period was pretty smooth, because it was well planned, both me and my co-founders. At the beginning, my co-founder, Ben, he is pretty much running day-to-day jobs, firefighting every day. So I was handling like the finance and accounting. Then, once we get the senior people of the finance and accounting, I start to Like you have the generals there to kind of monitor it. You just need to advise there, right? Then I went to the marketing side. Then same case, we slowly build the marketing side. And once we have a generals there too, then I start to put my foot off a bit from the gas. My last role was in product. I love product. I'm someone that always challenge, and I always believe that innovation is something that has to be built in the company DNA. Without innovation, you are just ready to be disrupted. Even a tech startup that disrupt the industry can be disrupted too, right? So you need to keep innovating. So that's something that we truly believe in KoinWorks. So finally, we promote our VP of product to be a CPO. Then, I took my foot off too. Now I'm more investor relationships, fundraising, small strategies now. Yeah, product is still close to my heart. So, innovation lab is something that I love to do. So it's still something I love continuing to do too.
So what do you find is the difference between the new venture and the family business? You started hinting at it a little bit. So tell us, what's the culture difference? What's your personal difference? How do you do things differently?
Oh, man. It's so different. I mean, one is the age group, the way how people see you, right? So in the family business, they see you very differently from how the employees see you in the tech startup. In the tech startup, well, luckily for those we hire, they give like 110% and they are on fire. They want to challenge the market. Well, in the traditional business, it was more like, oh, this is what you told me to do, I'll just do it. Then they don't question it, right? Since a lot of the people are more older, right, I'll say, because it was my dad's era, I would say they are kind of settled already. It's hard to see the fire in them. So they just want 9 to 5 job kind of thing. Yeah, I call that the settling age. And that's something that I think the big difference, the culture. Yeah.
How has your own personal routine or work style changed as a result of this transition as well?
Oh, wow. It's a lot. This is what I tell all my fellow founders. I always believe in a philosophy that you can't do too many things at the same time. The thesis that I always use, right, is in life you have 4 burners. You have your career, your family, your social, and your health. So at some point in time, you have to make a decision how many burners you want to burn. If you burn 4 of it at the same time, it'll be just a small fire. You won't get anywhere in your career. You won't get anywhere in your social life too and stuff. So at different stage of my life, I choose to burn 2 only, some 3. So I do sacrifice certain things, but that's the life of a founder, so I'll say. Yeah, you have to sacrifice. You can't be 24/7 everywhere, right? And I know all founders have health issues, actually, especially the early stage founders, right? I mean, they put their heart, their sweat, their blood into making things work, right? The first 3 years of the startup, I'll say that's the fragile stage. And that is the part where I think if the founders are not putting everything in, that's not the right founders.
That's really interesting. I love the 4 burners analogy. What advice do you normally give, or how do you think about people should be switching them on or off or prioritizing?
Yeah, everyone has a different needs. For me, when I started KoinWorks, I understand that I have to row 2 boats, both my family business and KoinWorks. So career and family was my choice. The other 2, pretty much, I was switch off. I think during that 2 years, most of my friends say, like, where's Will, man? He disappeared. Where's he? Yeah, and then my health also. Wow, man, I tell you, I was gaining weight. I've GERD. Wow. It's just insane because you are eating irregularly, and you are in constant stress and challenging yourself all the time. So, yeah, that is really a hard time for me. I mean, in terms of health-wise, that was very, very challenging. And there's a time I remember vividly that I have to pitch to investors, and I have a GERD attack the day before, right? So the next day, the mood wasn't right, the feeling wasn't right, and you still have to make it happen because investors like, this is the time, I have to talk to you. It's not like, oh, let's reschedule. So yeah, I think my advice is choose wisely the 4 burners, when to burn, when to kind of scale some of it and to turn off some of it.
As you think about these 4 burners, how have you been able to prioritize? Are there any hacks to make it easier to have 3 burners or 4 burners? Because nobody wants to do 1 or 2 burners, right? Everybody wants to be all 4, right?
Yeah, so I mean, if you don't have a family, you're not married with kids, right? I think family will will most likely be your parents. That's easier to manage. But you have your wife and your kids, then it's a bit different. There's attention required and constant high touch, with your kids. Else, you'll be considered like you're not there for their birthday. You're not there every time. Even physically you're there, mentally you're not there. Then it doesn't feel right too, right? So I think that the hack for this is not saying not to get married, but do your entrepreneurs earlier. I think that makes life easier, I think.
What's interesting is that now you've also not only been the executive of KoinWorks, but also starting to angel invest and do that as well. So what do you see in the founders today?
In honesty, founders are getting more complicated, I'll say. Yeah, their expectations are very different from the era where me and Ben started. I think that era when we first started, or you can talk to Nadim too about this to verify, there's not that many VCs around. So probably you can count early stage VCs in Indonesia or Southeast Asia by your fingers only, pretty much. But now, it's flooded. Everyone is going early stage. So it's actually definitely is the right time to be a founders right now. If anyone, your audience wants, having doubt to be a founders, I tell you, the money is everywhere. This is the golden era of tech startup in Southeast Asia. So hence the reason why I jumped into this investment, right? I think the previous 5 years and the next 5 years, we'll see a lot of disruption to the traditional business, and we'll see a lot of very successful, nice, great stories of founders.
You've been a founder and now you're an angel. What's it like to be on both sides of the table? Do you give them advice? Do you feel like you can help them run the business better? How does that happen?
The strange thing is there's a couple of things why founders wants me in their cap table. One, of course, is my network. Two, of course, is my experience. I think the lastly that I think a lot of founders might not realize is someone to be there, right? Someone when they get confused that, hey, this is what happened to me too, a tap in the shoulder kind of thing. Like I've been there too, so no worry about it. Just we just need to figure out. So the mental part actually is a key component too, actually, and the good thing is I sweat and bleed on it before, right? So it's more authentic for me to kind of tell them about it.
Making it authentic to tell them about it. Do founders listen? Because, when I was a founder, some angels I listened to, some angels I did not, right? So I'm just kind of curious how you think about it.
Yeah, I mean, founders has a lot of angels. I mean, right now, when you see the cap table, the early stage startup, right? Whoa, they have like 20 angels, and you can pretty much see who's the name in there, right? So I think there's angels that the founders need the angel for certain purpose. So I think if they can optimize each angels for each specific needs and listen to what advice is given, not all advice given will be 100% correct, and it might not be at the right time too. It might not be at the right industries too and stuff. But I'll say founders, your time is precious, right? So definitely you have to pick and choose, right? And advice given is not 100% correct. Yeah.
How would you advise founders to differentiate between good advice or bad advice, or advice that should be taken and advice that should be put aside?
They have to listen to a few more advice, right? So you can't take one source of truth. So I always tell founders that it's good to have multiple angels to listen to, and it's good to listen to the board too. Everyone has different inputs, and in the end, they have to digest it and spit out the output themselves. Versus, this is what the advisors say. I'll just go along with it. Founders intellectually, they have to be up there too, right? To absorb and to filter the noise and to speed up the output.
For yourself, has there been an advice that you said, nah, not so interesting, versus advice that you find, more relevant?
Well, I think we always have that scenario, right? Because sometimes advisors, when you tap into them, they only know at that point of time, right? But historically, sometimes you need to have the whole context too, right? Sometimes. So yeah, I'll say I went through that stage too. And definitely me and my co-founder, we have to digest a lot and spit out the right output there. Hopefully we're spitting out the right output all the time.
And it's interesting because you've recently raised, a lot of capital as you kind of hit the scaling phase, not just equity, but also in terms of debt as well. So Could you share a little bit more about the different stages, right, between the founding, the early stages, and now, you're starting to raise a lot of capital? What has that experience been in terms of the change in company growth?
That's the part being a founder. I think that's the beauty of being a founder, right? And you have to constantly evolve. I think early stage founders, it's good to build a culture where you are hands-on, where you get your hands dirty all the time, and you're looking at every single details and stuff. But you can do that when you have 25, 30 people, right? When your company are still figuring out. Once you have proved your MVP and you need to step on the gas on the growth side, then it's a bit different. You need your generals there to help you. That's when you have like 200, 300 people. You can't be making decisions every single time. Then pretty much you don't have time for yourself, to re-energize yourself. You need to evolve as a founders, going through that different stages and understanding when to step back and when to step in. At our stage, right, I think it's such a key component that we empower our generals to be able to make key decisions and the right decision all the time, right? Sometimes there's doubts, we have to make the call too, right? Yeah, I think that's I'll say the different stages, importance of how founders need to evolve themselves.
How do you make the call when there are doubts? Like, what helps you make one decision versus the other decision?
Specifically for me, some founders require like 90% data points to make a decision. For me, I think 70% will do, because by waiting for 90% data point, or even some very conservative founders who go as far as like 100%, 99.9%, it will be too slow, I feel. But certain decisions require that accuracy of data point. I think that's something that the founders need to figure out, which industry they are in, how sensitive in the decision on that thing. But for me, I like to make quick decision, but of course I need to have the right data point too. And for me, I feel 70% data point with my gut instinct, I like to make that call. Yeah, versus waiting for another weeks for data point and stuff.
With that 70% information, how do you make decision A versus decision B? Do you talk with friends, advisors, family? How do you have that debate? Yeah.
This is called corporate governance too, right? As a founders, now you have board to answer to, right? So on certain big call, when in doubts, I think the first few people you have to dial is your board. I think that's a good structure, right, of doing things the correct way. Friends and families, they might have the industry's experts sometimes, but it's for you to ask advice. But the board is more a collateralized decision making, I'll say.
Yeah. What's interesting is that you're making all these decisions at a very fast growth rate, over the past 6 years. You're also working with SMEs in Indonesia. And historically, that's always been a tricky sector to work with in terms of non-performing loans, in terms of information is there. How have you gone about thinking about that?
Yeah, I guess that's where my key learning point too, right? Underwriting for unbanked and underbanked, right? SMEs, influencers, content creators and stuff, freelancers. It's very different from underwriting a commercial size company or corporate size company where their financial statement is pretty clear, right? Like you don't have to reconstruct the financial statement that much. SMEs is the founders too, right? They are the founders. They are a business that has less than 20, 30 people, right? The dependency on the legitimacy and the strength of the founders become a key component. The challenge is sometimes you meet a founders who is not legit kind of sense, or the SMEs, they're just hobbies. What we want to see is, SMEs or, who is treating this as their life, is something they really want to do, or at least, this is a side hustler for them. For those who is not really serious, then yeah, there's always a challenge there.
And how have you been able to get your non-performing loan percentage lower than average? Because that's a big set of decisions, right? It's like, as an underwriter, you probably have less than 70% information than you do. And then you yourself are making 70% decision on that. So how do you get better and better over time?
Yeah, I think that's through experience. I think once you sharpen your tools, your senses become more attuned to it. Talking about MPL, the right way to put it, MPL is just one metric to measure the portfolio quality. Some startup or some lending company will readjust their pricing to adjust on the MPL. I think the conversation should be NIM, net interest margin. So a company might have a slightly higher MPL. Not saying we are, KoinWorks but it might be super profitable. To put it this way, you have an MPL of 1%. but the company is not profitable. It means you are not taking enough risk. But then a company that has an NPL of 3% and then is super profitable, then do you say that this guy 3% is wrong? I think it's how you price it against your risk the market that you are hitting.
Yeah, that's actually a really good point. And I think that's something that most people don't really understand, which is that at the end, there's a trade-off between these two factors.
Yes.
I think what's interesting is that there's also a good strategic choice about which of these to prioritize.
Yes.
In certain times, to focus more on the net interest margin, sometimes on the NPL side.
Mm-hmm.
How would you advise fintech companies, right? Because there's so many of them that are doing some kind of lending out there nowadays, right? How would you advise them to be thinking about the fintech space or the strategy they should be thinking about?
Well, I mean, everyone talks about nuclear winter. So all investors are looking at profitability, right? So my single advice for those who is doing credit is do not subsidize interest rate. That's a rabbit hole, man. Yeah. I mean, I know some peers, are doing that. I think that's not healthy. If you say someone is risky, you should price it according to their risk, right? Not saying that you price it according to their risk and you're giving them discount. Then sooner or later, you're just going to shoot yourself on the foot, I'll say.
Yeah, that makes a lot of sense. And I think that's interesting because there's so many people going to Indonesia because there's a huge SME growth story about them as the backbone of the economy, the long-term macro trends, but also I think facing the difficulty of just not having enough information or credit history to really make that decision as well. How should people think about the Indonesia SME versus fintech approach? Is that something that I know you're obviously all 2 thumbs up for it, but I'm just wondering how people should be thinking about it.
SME always has a data point, but it's just a matter of where, right? I think a lot of the offline SMEs, the data point is not available online or it's not available in the internet or in the digital world. For those who is online, actually, they have a lot of data points. It's just how we harness that data point to underwrite them. And of course, a business that is commercial size, like I say, you can construct the financial statement more clearly versus someone who is underbanked and unbanked. The way you have to see it is the risk profile. With this amount of data point, what kind of pricing you should put on it versus someone who has a complete data point, what kind of pricing you should put on it. So I think in the end of the day, it's the price risk factors. Indonesian SMEs, yes, some SMEs way to the bottom of the chain has really no data points at all. And that's the part where you have to price it accordingly, right? You can't say that a farmer who is dealing with cash basis and stuff, and you are giving him a attractive interest rate, right? Then it's wrong. But then there's a lot of now all these agri-taxes popping out everywhere. There is empowering these farmers or these fishermen, right? Then you have additional data point, and that's when you can price it even better, right? So I think data is the key here, I think.
And what's interesting, of course, is that you also talk about financial inclusion, right? For those who don't really understand this, I think I have a hint of where you're going with this, but how does providing loans to SMEs lead to more financial inclusion? Like, what is the social value or impact of lending to the underbanked and the unbanked?
Okay, we can use analogies, right? If someone doesn't have an internet access, he will fall behind because he can't educate himself through reading in the internet or getting video contents and stuff. That's why internet access become a key point in our life nowadays, right? So financial inclusion is the bread and butter of SMEs too. Imagine SMEs who only can get loans from loan shark. Pretty much they are doomed. Their interest rate is 50%. And that is not a year, that is like by month. So having a financial inclusion for this, we give them access of credit at the right price for them. It will change their business. We have a statistic in KoinWorks. If they take a loan with us, a productive loan with us, within 6 months, their sales will increase by 60%.
Wow, that's powerful. And that 60% helps them, pay employees better, pay themselves, feed their families,
yes,
work their suppliers better. Amazing. As you think about all of this, could you share about a time that you personally have been brave?
I think the biggest brave decision I made was to jump from the family business to run KoinWorks. I think that takes a lot of, not only negotiation, but I think it's a big decision. It changed my life too, in honesty. Looking back, I think it is quite crazy. So, some of the phrases that I remember was like, how can you do lending without looking at someone? Right? And then you want to run that business? Like, yeah. So that gut feeling, is really that sixth sense that makes me took the jump. Like, this is the one, man. The data shows that there's a big market there, and this is the one that I need to tackle. I need to empower people here. This is where I'm going to change my life and people's life too. That was the most, I would say, bravest time ever. Of course, besides taking the decision to marry my wife, right? I think that's another brave decision, I'll say.
That's interesting, right? Because was your wife already there when you made the decision to transition from the family business to founder?
Yeah. I think it's a collective decision, of course.
And how was that collective decision, right? Because I think there's so many founders out there and they're trying to make a decision to transition from an employee job or executive to become a founder. And then they have a wife, maybe they have children. So do you have any advice or memories about how you reached that collective decision?
I think it is good to sit down and talk and run the numbers. Everyone has a different pockets. So it's not easy to kind of generalize things, but it's good to run the numbers, because being a founder, the statistic too. Maybe out of 100 startup, only less than 10 will make it. But the earlier you do it, I always truly believe that the more chances you can fail, but the more chances you have to succeed too. I started KoinWorks, I think, honestly, I feel it's a bit at the later stage. I should have done it like when I'm in the late 20s instead of mid 30s, right?
I mean, that's also something always people think about, right? Is that should they wait longer and get more experience before they set up a business versus starting earlier? Sounds like you're very much more earlier. You're very much more in favor of going out earlier.
Yes. Yeah, of course. I think experience can be gained during learning. But of course, if you have more experience, chances of success is higher. But it's not that much higher, actually.
Yeah. If you could go back in time, all the way back to your senior year, right? In Michigan, right? Ann Arbor. What advice would you give yourself back then as a senior?
Wow, network as much as you can. I think as you grow older and as you build your startup, the power of network, the people that can open the doors for you, is much more important.
How do you advise people to go about networking? Because, so many folks there, obviously, once you're a certain executive, you can't be very comfortable with networking, but there's so many people who are not comfortable with networking, or they're relatively more junior. How did you get comfortable with networking?
I'm a really introvert guy. I'm an engineer, introvert. Typically what kind of character I am. If I go clubbing last night, I'll be sitting in the corner there, playing with my phones, sitting down there. Yeah, I think everyone has to get into their comfort level. So I think networking is also a kind of a life process too, right? I don't think you can live your life just be yourself. Alone, cocoon in the corner and stuff. So you need to be able to network with your families, with your friends, your kids too. You need to be able to network with them. So the sooner you learn about it, the better it is, I feel too. But different people has different pace. I think it's great that to start early in school. When you fail, it doesn't feel bad. When you fail in the real world, your founders, then the effect is greater. Yeah. So school is always a good time to experiment a lot of things. Yeah.
I love that so much. On that note, I'd love to wrap things up by kind of sharing the 3 big messages that I got from this sharing. First of all, thank you so much for sharing about your own personal journey from computer science graduate to family business and listening to the board meetings and, like you said, not knowing what's going on, to helping out at the family business from department to department and eventually choosing to be a founder yourself. So that was a really interesting, I think, trajectory that really feels familiar, especially in Southeast Asia, because I think there are so many people who are obliged or have responsibilities to the family. So I think it was really nice to hear you share about that experience. The second, of course, is thank you so much for the technical dive actually into fintech and risk and reward. I think about the net interest margins, the non-performing loans, but also I think what the impact is about helping SMEs in Indonesia and Southeast Asia. So really amazing to hear that ripple effect of what you're building over time. And lastly, thank you so much for sharing about the 4 burners, about family, social, health, and career. Really interesting to hear that analogy and metaphor about how founders and folks should be thinking about what they can switch on, switch off, do more, do less, and also hearing a little bit about your own personal struggles in the early stages, for example, around your health, to focus on your career versus later on now that you've been able to prioritize a little bit more of your family and career as well. So thank you so much for sharing all that you've shared.
Thanks, Jeremy. Really enjoy talking with you here.
Thank you for listening to Brave. If you enjoyed this podcast, please share this episode with friends and colleagues. Sign up at www.jeremyau.com to discuss this episode with other community members in our forum. Stay well and stay brave.